How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Of course, welcome as well to 2022. We are now well on our way into the new year, and I sat here last week sharing with all of you that probably heading into the new year, we're going to be coming down off of this Santa Claus rally. That is exactly what's been happening. My account is actually down by 439 cents. My account sitting at $85,755.96 on the day. However, looking into the future, and I mean well into the future, I only see really continued growth in the long term. In the short term, let's just remain on our toes for volatility to come. This being a new month and of course a new year, I want to reveal to you each dividend paycheck that I've received throughout the entire month, that being 13 in total, a video you're not going to want to miss out on. And before we dive in, tap on that thumbs up button and help me grow this channel. And of course, go ahead, tap on that subscribe button while you're at it, because I'd love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. Now, certainly these are my favorite types of videos to produce for you all, to reveal all the dividend income that I've received throughout an entire month. Now, I'll have you know right off the bat that this past December has been the most profitable month in terms of dividend returns. I'm incredibly excited to share them all with you. Now, because we have 13 total dividend paychecks that came in, I'm going to try to be as concise, short, sweet, and to the point as possible for you all. However, I still want to go stock by stock, company by company here, sharing with you the tidbits of intel that I feel are most important for you all. Now, let's go ahead and go back to the beginning of December. On December 1st, we had Wells Fargo, ticker symbol WFC, pay me out a dividend paycheck. Now, what's most important to understand about Wells Fargo is that they are one of America's largest banks, and quite frequently they're actually under scrutiny and under fire because of some of the things that they've done in the past. One of which is in 2016, they had a massive account scandal. Of course, the scandal got busted, and then on top of that, we had the pandemic, which no one foresaw coming, and therefore, Wells Fargo stock was absolutely destroyed, which is exactly where I came in to pick up shares of Wells Fargo. Now, what's most important is to look ahead into Wells Fargo's future, because of course, as one of the largest banks, they're almost too big to fail. And although the Federal Reserve placed an asset cap on Wells Fargo right after 2016, we can see that they've been making very healthy moves to clean up their act. Of course, they've also been in the process of restructuring. And now with the Federal Reserve raising those interest rates, it's only going to be good for business for Wells Fargo, leaving analysts with higher hopes and higher expectations for Wells Fargo, coming in at a median stock share price of $54.25, a high stock share price of $67. So certainly room for Wells Fargo to continue to grow. Now, in terms of the dividend paycheck I received for holding 37 shares worth of Wells Fargo, their dividend yield coming at 1.65%. They sent me a dividend paycheck for $7.50. A handful of days later, we had Southern Company, ticker symbol SO, pay me out a dividend paycheck. Southern Company is an American gas and electric utility company that was founded back in 1945 and has since then grown its customer base to over 9 million customers and businesses throughout the United States. Most importantly, when it comes to making an investment in a utility play like Southern Company, is the very fact that it's just a very dependable, reliable dividend investment to make, considering the fact that just about all of us need to pay our gas and electric bills to keep those lights on. So we can expect that a company like Southern Company is going to be a big dividend player, which it is. They've been paying dividends out for over 70 years, and while not a dividend aristocrat nor a king, they certainly have that reliability factor, with their current dividend yield coming in at 3.9%. And for a shareholder of Southern Company holding 7 total shares, Southern Company sent me a dividend paycheck for $4.67. Next up, coming to the 7th of the month, we had a healthcare pioneer. This company was Johnson & Johnson, ticker symbol J&J, pay me out a dividend paycheck. Now, Johnson & Johnson has been in business since 1886. That's 130 plus years worth of a rich history revolutionizing the entire healthcare industry. I talk about Johnson & Johnson quite frequently. I do believe it's a dividend investment that should certainly be included in just about everybody's dividend investment portfolios because it is dividend gold. Now, ultimately looking ahead into Johnson & Johnson's future, and what makes me most excited heading into 2022 is the very fact that they're going to be rolling out their consumer goods segment of the business into its own company. Now, why that's important is because their pharmaceutical segment as well as sales, their medical device segment was bringing in about 80% worth of Johnson & Johnson's revenue, and that 20% that was coming in from consumer goods brought in a lot more negative press than anything for Johnson & Johnson. So them shifting that off into its own business, I believe, is going to bring a lot of positive momentum for Johnson & Johnson's stock share price. Now, it looks, analysts certainly agree with me here, as their stock is currently sitting at around $171 per share, but they're coming in at a median stock share price of $180 per share and a high stock share price of $215 per share for Johnson & Johnson. At this point in time, I own 23 total shares worth of Johnson & Johnson. Their dividend yield is coming in at 2.49%. They went ahead to send me a dividend paycheck for $21.23. Jumping to December 10th, we had a dividend paycheck come in from one of the direct descendants of John D. Rockefeller's Standard Oil. That company is Exxon Mobil, ticker symbol XOM. Most importantly, and just taking a look at the trajectory of Exxon Mobil's stock, at least in the last couple of years here, is that if we go back to the onset of the pandemic, there was a massive oil sell-off, and of course, nobody was traveling anywhere, so Exxon Mobil's stock share price certainly took a hit. It rebounded in 2021 as we really began to reopen, and now as we're on that continued trajectory of a reopening, I am only predicting that Exxon Mobil's stock share price is going to continue to follow suit. Now, analysts have those very same expectations, so certainly getting into Exxon Mobil right now may very well yield you a nice ROI. Their stock share price is currently sitting at $61 per share, and analysts have expectations that it's going to reach a median stock share price of $72 per share and an even higher stock share price sitting at $111 per share. Now, as dividend investors, we take advantage of Exxon Mobil's dividend. They've been paying them out for 37 consecutive years, raising them year over year, making Exxon Mobil a dividend aristocrat. And of course, with their dividend yield sitting at 5.71%, I'm currently holding 3 shares worth of Exxon Mobil, so they sent me a dividend paycheck for $2.68. As we move to the 15th of the month, we had our biggest payday of the month with 4 dividend paychecks coming in. The very first dividend paycheck that came in came from the iconic Coca-Cola, ticker symbol KO. Now, as you all probably know, Coca-Cola is the world's most dominant soft drink manufacturer, and it's going nowhere anytime soon. So as a dividend investor who is only looking to add high-value dividend stocks to my portfolio, Coca-Cola is certainly on that list, as long as I'm able to buy those shares of Coca-Cola for the right price. Now, looking ahead into 2022 and beyond, Coca-Cola is certainly making changes within the company. They are developing different marketing strategies while simultaneously working on product reduction, therefore cutting out products that are no longer bringing in the necessary ROI for Coca-Cola to continue to produce them, which of course leaves analysts and myself excited for Coca-Cola's future, as they're currently sitting at a stock share price of $59 per share, but analysts only foresee continued growth, coming in at a median stock share price of $63 per share and a high stock share price of $67.60 per share. Now, as a shareholder of 17 total shares worth of Coca-Cola, their dividend yield sitting at 2.85%, Coca-Cola went ahead to send me a dividend paycheck for $7.37. Now, while on the topic of such an iconic business, we might as well talk about another one here. We had McDonald's, ticker symbol MCD, pay me out a dividend paycheck on the same day. And McDonald's is certainly one of the world's most prominent fast food restaurants, I think just about ever. They were founded back in 1940 and has since then, well, just named that McD's name for themselves. Now, ultimately, looking ahead into McDonald's future, I'm certainly excited. They've been revamping their restaurants, basically doing away with Ronald McDonald himself and now adding more vegan-friendly menu options, which all now makes analysts and myself excited for McDonald's future, coming in at a median stock share price of $275 per share and a high stock share price of $306 per share, which are both up from where they're currently sitting at $268 per share. Certainly room for growth. Now, at this point in time, I only hold 1 share worth of McDonald's. However, that still allows me to go to that dollar menu and select whatever I so please off of it, because at a dividend yield of 2.06%, I received a dividend paycheck for $1.40. And then to close out the 15th of the month, we had 2 REITs pay me out dividend paychecks. Now, I talk about these 2 REITs all the time. The first one is Realty Income, ticker symbol O. Now, Realty Income, founded back in 1969, has been doing an outstanding job in not only making a name for itself, but scaling rather quickly. They have built themselves a nice portfolio, now amassed over 11,000 properties spanning across the United States and even making their way into the United Kingdom, Puerto Rico, as well as Spain. I'm very excited for Realty Income's future. Of course, they just continue to invest in freestanding single-tenant commercial properties, leasing them out to over 650 reliable clients. So a company that's certainly not going to be disappearing anytime soon, just giving me more confidence to dollar cost average my way into this position and leaving analysts very excited for the future of Realty Income as they come in at a median stock share price of $79 per share, a high stock share price of $92 per share, both of which are up from where it currently sits at $71 per share. Now, best yet is that Realty Income is a monthly paying dividend stock. It has 26 consecutive years worth of dividend payouts and increases, making it a dividend aristocrat with a dividend yield at 4.13% and having 74 total shares. Realty Income sent me a dividend paycheck for $17. And as for REIT number 2, we have Stag Industrial, ticker symbol STAG. Now, Stag Industrial was only founded in 2010, but man, oh man, am I excited for Stag Industrial's future. They are myopically focused on the acquisitions and operations of single-tenant industrial properties, so properties like warehouses and distribution centers, with 40% of their entire 517 property portfolio dealing with e-commerce fulfillment in the way of the future. Stag Industrial is almost a no-brainer in terms of an investment for me to make at this point in time. Now, analysts are also excited about Stag Industrial's future, coming in at a high stock share price of $54 per share, where it's currently sitting at $47 per share. And honestly, I do think it is just right now fair valued. So I'm not saying it's that ring in the bell, go buy it right now type of stock opportunity, but certainly I believe in Warren Buffett's good old saying that it's just better off investing in wonderful companies at fair prices than it is to invest in fair companies at wonderful prices. With that in mind and recognizing it's a brand new position within my portfolio, I only had 10 total shares of Stag Industrial. Their dividend yield comes in at 3.07%. They sent me a dividend paycheck for 61 cents. Jumping to December 27th, we had a dividend paycheck come in from a company that I've just begun a position with. I'm incredibly excited about it. That is Lockheed Martin, ticker symbol LMT. Lockheed Martin is an arms defense and information security technology company that was founded back in 1995 and since then just been securing government contract after government contract on a global scale. Now, this company is certainly not going to be disappearing anytime soon. I mean, go figure, with just about every country prioritizing defense spending, they just can't get enough, leaving for a company like Lockheed Martin to just continue to rake in that revenue. Now, Lockheed Martin stock actually plummeted rather recently after the company missed on an earnings report. However, that should not dictate the value investors' outlook for Lockheed Martin. They just secured 2 high-valued contracts with the United States government, one coming in for $847 million for a modification project with the U.S. Navy, and the other contract amounting to $324 million to work hand-in-hand with the U.S. Air Force on an F-35 project. Again, this company is just a rock-solid dividend investment to make. Now, analysts are super excited about the future with Lockheed Martin coming in at a median stock share price of $378.50, a high stock share price of $450, both of which are up from their current price that is sitting at $355 per share. Now, at this point in time, I only have 5 total shares worth of Lockheed Martin, but with their dividend yield coming in at 3.17%, Lockheed sent me a dividend paycheck for $14. Next up on the 31st of the month, and as for the last individualized stock, we have Bank of America, ticker symbol BAC. Bank of America is America's second largest bank, and of course, just a bank that is really never under that much scrutiny. It's actually one of Warren Buffett's biggest plays within his portfolio, so that should certainly just deliver through on a ton of confidence. Very similarly to Wells Fargo, Bank of America is bound to actually do very well in 2022 with the Federal Reserve hiking those interest rates, so we certainly have more momentum to look forward to when it comes to Bank of America's stock share price. Analysts certainly agree, coming in at a median stock share price of $50 per share and a high stock share price for Bank of America at $64 per share. Those are both up from where it currently sits at $44 per share. Now, as a shareholder in Bank of America holding 20 total shares, their dividend yield coming in at 1.88%. They went ahead to send me a dividend paycheck for $4.33. And last but certainly not least, I want to talk about the 3 funds that I am invested into, because heck, if you're just playing the whole market, you really cannot go wrong. And most importantly, it's that fail-safe strategy. The very first ETF I want to talk about is Vanguard's high yield dividend ETF, that is ticker symbol VYM. Now, this particular ETF I actually bought into after selling out of my position with SPHD. Many of you may be well aware of that one, but I find VYM to be an honestly way better performer within the stock market, invested into higher growth stock opportunities all of which are also paying out dividends. Feel free to do your due diligence on this one. At this point in time, I only hold 3 total shares worth of VYM. I'm just going to continue to dollar cost average my way into it. However, as an average dividend yield of 2.8%, and it allowed me to collect a paycheck for $2.84. And as for the 2 remaining funds, we have VTI, which is Vanguard's total stock market index fund, and then we have VTSAX, which is Vanguard's total stock market index fund, Admiral funds. They're basically the same exact fund, so I'm not going to go far into detail about them. Again, do your own due diligence with these funds. I particularly like them because I'm just playing the entire market and reaping the benefits of doing so. For being an investor in VTI, currently holding 23 total shares with that dividend yield averaging 1.17%, it sent me a dividend paycheck for $10.32. Whereas being an investor in VTSAX, holding 224 shares with an average dividend yield of 1.16%, I received a dividend paycheck for $92.83. And now for the moment we have all been waiting for, or at least I certainly have, the big grand total dividend reveal. It has been my most profitable month yet as a dividend investor, bringing in $186.78 for doing absolutely nothing. That is the power of dividend investing. That snowball is certainly well underway. And now most importantly, just going to our dividend tracker and actually inputting these numbers, we can see that it has steadily been climbing. But at the end of the year here, we brought in a grand total of $817.76. Now, if we divide that by 12 to get our monthly average, we can see I'm bringing in right now $68 per month on average, which is just for doing absolutely nothing. Exactly why I love being a dividend investor. I do not think there is a better investment strategy for the long-term value investor. Now, YouTube, that's a wrap. If you like what you heard, you learned something new, drop those comments below. Let me know your thoughts. And of course, if you yourself are interested in investing in any of these companies, do me a favor and just do your own due diligence, because I am not a financial advisor. And of course, before we close out, tap on that thumbs up button as that helps me grow this channel. And if you haven't done so already, just tap on that subscribe button, because I'd certainly love to have you on this journey with me. Now, YouTube, until the next video, I look forward to seeing you all there.